Hello friends, do you want to know how I made 3 lakhs or 50% profits in just 50 days? Now this stock that I bought is Indo Industries Limited or ICIL. A lot of people and TV channels have been talking about stocks from the textile sector of late because the returns from these stocks have been just phenomenal or too good to not notice in the recent times. But I identified this stock in the mid of June just when it was about to start to head higher. But you might ask, or you might be curious how I did this or how I chose the stock so that it gave me 50% returns in 50 days. Now this is exactly what we will be discussing in today's video. Today we will discuss 5 key aspects to identify such potential stocks. So first, the process to identify such stocks. Second, how and when to enter the stock. Third, how to add more to the stock which is moving higher. 4, how to allocate your money to the stock so that it makes a significant difference to your overall portfolio. And last, how to identify the initial stop loss and how to move your stop loss higher so that you can capture big gains. And also finally, I will also share my trade log from Zerodha so that you know that this trade is a real trade and the learning from this video would be worth your time. So let's directly jump into the trade analysis. So starting off with the first thing, like so every stock. So before you want to buy a stock, you need to first identify a stock, right? So how did I identify a stock? Now in my Twitter feed, in my Twitter channel, the pinned tweet, I've talked about CCI indicator, which I use on the weekly time frame, not on the daily time frame, but on the weekly time frame. How do I use CCI 34, which is the period, and how I use that indicator to identify stocks. Now the filter condition is simple. If you want to find the scanner, go to my Twitter pin tweet, you will find this CCI strategy. So the condition is that CCI 34 should cross 100 on the weekly time frame. Now we'll look at that shortly, but before that I just want to show this newsletter which I published on the 13th of June 2021. It was the 4th edition of my newsletter and I picked up Indo Industries. Now, why did I pick Indo Industries? There were hundreds of stocks which you might see, but why did I specifically pick Indo Industries in this newsletter? Now, if you see, I've given proper reasoning here, the fundamental reasoning. We'll come to the technical reasoning shortly, but the fundamental reasoning here is clearly that the company reported an increase of 20% in sales and more than 2x in operating profits in 2021, mainly driven by a significant increase in the operational performance. The operating margins increased significantly from 9% to 16% in 2021. Right now, that's the fundamental reasoning why I picked this stock. But now jumping into the stock itself, and I'm just going to see the stock from a technical perspective of what it has done. Right now, always the first thing, start off with the monthly charts. Right, so since the monthly chart, since 2005, this stock was forming a base, and then it kind of broke out. Around this area, there was a breakout in 2013, and it went from 4 rupees all the way to 230 rupees. Right, and then since 2016, it had a massive, downside. So it fell almost, from the highs, it fell almost 90%. Right, that was a crazy fall. And then if you see, just in 2019, it tried to break out, but it couldn't break out, and then the COVID crash, it just went below. Right, but then if you see here, there was a nice base which formed. You could also, call this an accumulation phase, and then the stock broke out here with nice volumes. But then I did not invest in the stock right at that point. When did I identify the stock? I identified this stock in the month of June. Right now, you might say in this week of June 7 or that weekend is when I identified the stock. But you might ask, after so much of move, the stock has already gone up from 24 to 170. Now, why do you invest in the stock again? Now, remember in markets, every stock has a cycle. It goes up, it comes down, it goes up, it comes down. And even this previous move you see here, right, this move was not a one-way move up. It went up, it came down, it again went up, it kind of consolidated, went up, consolidation. So there was multiple rounds of consolidation before it started going down, right? And the same way, this was the first move up, and then it consolidated for October 2020 until June 2020. That was almost a 9 months consolidation. Now, how did I find the stock? It was based on the CCI indicator. Now in this week, if you see, my condition in the scanner is CCI should cross 100 on the weekly time frame. So we are on the weekly time frame chart. CCI has crossed 100 and we had massive volumes that week. right? Now, again, you might say the stock has already gone up, from 100 to 170. It is a matter of a few weeks. Why are you investing now? But remember, whatever goes up in market will continue to go up, purely because there are big people who are buying this stock and they drive the prices higher. And anything which has to go higher has to go at some point, it has to come down and then head higher. So we're going to buy the first base here. After the first base is formed, we are buying that first move up, the second move up. Right now, since this week, I saw that there was a nice green candle in that week and the nice volumes as well. So then I went and checked the fundamentals. The fundamentals were excellent. Operating margins increased. So then I need to find my ideal entry point, or I need to first find why or how has the stock behaved recently. Now, if you see here, just before this bottom was done, there were nice wicks around. So when I mean wicks, the stock tried to go down, but it could not go down right after this point. Every time it went down, it came up and closed, which means there was demand, there was buying here. Now this week dip, if you see, there was a nice volume, and then after 2 weeks, the volumes hit a low. The volumes, if you see here, the volume bar, this week volume was 446,000 shares, which was actually traded. Now this low volume was back only in May 2020. Right after that, this is the time when volumes literally go down. Now this shows that literally there's no one else to sell in the market, and all the selling has been absorbed by the big guys, and the stock is starting to move up. So this came in our scanner this week. So it was a breakout, the previous all-time high. So the previous high here was 171.75, and here we closed at 170.65, and we also made a high of 178.795. Now, how did I enter the trade? Now, after you identify a stock, you have a good fundamental reasoning, you have a good technical reasoning. This is a beautiful, November to June. It's in a nice 7-8 months base, consolidation base. So another strong reason you have to buy. And then you need to find the entry points. Right now, the first entry point for me was, above this high here. Now, I found the stock in the 13th of June is when I sent, right? So 13th of June was, somewhere here. Sorry, yeah, 11th of June. So I sent this newsletter on Sunday, and the 14th of June is when, the stock was here. Now, how do I know when to buy, right? That's the next point. So I've made the trades here. So I'm just going to unhide it so that you can see. Right now, how do I enter the trade? Now, my initial entry plan was to enter above 179. Now, what is 179? 179 is this high of that week. So if you see, just mark that high, so that week high was 178.8, again 178.95. Now I'm seeing the high over here. So 178.8, 178.95, and then I'm just waiting for that to cross. But then suddenly what happened? The stock is forming a downtrend, a short-term downtrend. So I'm just going to connect that. And I'm going to see what is the stock doing here, right? The stock, if you see, is forming a downtrend here. And then on the 23rd of June, if you see, the stock kind of tried to break that high around, above that previous day high was 174.2. And it tried to break that high and it tried to head higher. But then what happened is there was some nice volumes also was picking up. So if you just zoom out, you will see that volume pick up there, right? So what I did on the 23rd of June, instead of having an entry at 179, I entered much earlier around, here if you see on the 23rd of June, I entered around 173.69. Now I will be showing my trade book where all the trades have been executed. So if you want to see that, hang on before I finish the analysis part. Now on the 23rd of June, I entered at 173.69 and I've deployed 47.9% or 48% of the planned quantity for this trade, right? So on the 23rd of June, around 173.69 is when I entered, which is right around that point, right? That's when I entered. That was my first entry. Now, when you have an entry, you also need to define your stop loss, and that's what most of us don't do. Now, for me, it is always the risk, right? So I want to find a risk setup which has very low risks. So if you see on this day, this was a low point, and I assumed that day when I saw a pickup in volume, I assumed probably this bottom is done and we're not going to go above that. Also, if you see here, after this down day, multiple times we tried to go below 165, but then it didn't close below 165. So I thought probably that's a low point for the stock, and I'm going to keep my stop at 163 and I'm going to take this trade. So I kept my stop at 163. Right, I'm just going to unhide this so that you see how I managed it. So I kept my initial stop loss at 163 and then I planned the trade. Now when I took the first time when I bought it at 163 and I bought 173.69 shares, I had some risk. Right now, what is the risk amount that I'm carrying on that day as of that day? So it will be 163 minus 173 into 1838. So that will be around 18,380 rupees. Right. So that is the risk if my stop loss hits. Now, usually that should be, if you're taking a trade, that should ideally be not more than 2% for any investments or any trading for that matter. 2% even is a lot. I try to keep it around 1%. Now that's how I started. So 1838. So I didn't deploy my entire capital on the first day. I deployed only 48% of my capital. So 163 minus 173 into 1838 is the risk that I'm carrying on that trade, right? So if on 23rd June, let's say on 24th June, it came and hit my stop loss, then I'll be losing 18380 rupees, right? So, but on that day, what is the closing price? It closed at 169.1. On this day, it closed at 169.1. The C is here. So 169.1. So as of that day, my open risk that I had, was my risk on that day was 8.28%. That's how much I'll be losing on that trade, right? And as of that day closing, my PNL was 4.84% down. So if you're going to the trade order positions and holdings, you will see 4.84% loss. But if my stop loss hit, that's my open risk, which is 8.28%, right? Now, so I deployed my first capital. I didn't put entire capital, right? So next day, what I did again, I saw a good day. It was a good inside bar that day. So I thought probably we're going to head higher, right? And then what I did was I added more on the next day, 24th of June. I added more, which is 470 shares, which is around another 10% of my capital at 172.26. Right, so I've done two trades. I've already taken 23rd and 24th of June. I've added 1838 plus 4, around 2,300 shares at an average price of around 173. And there will be some risk which I'm carrying. So that's the risk I'll be carrying, right? So now after that day I added, right? Now my stop loss is still at 163. So I've added. And then what happens? The stock again doesn't close below 165. So this is first attempt, second attempt, third attempt, fourth, fifth, and sixth times the stock tried to go below 165, but it couldn't go above 165, below 165. And also if you see, the volumes have started to pick up, right? And also the stock has started going up. Now on the 6th of July, now our previous high was this high, right? And also we have one more high over here, right? Now on the 6th of July, the stock tried to move up and it closed completely above all the previous highs. Now this was a good day because the stock went below, all the way, and then it opened here, it went below, and then closed higher, and also the volume picked up. So what I did on this day is I deployed my remaining capital, right? So if you see here on the 7th of July or the 6th of July, 6th of July, I added 1,522 shares at 184.3. Now the point to note here is you see that I'm adding on the way up. I'm not adding on the way down. Now that's the mistake that most of us do. As and when the stock price starts going down, we keep buying more and more shares. I will make another video of Sizzlon where I also lost some money doing that, but you should never do that because you're adding on more to your losses. So let's say I add first 173, then if it goes to 163, if you buy more, and if that goes from there even further down, you're going to add on to your losses. So you don't want to do that, right? That's why I add when I'm going higher. Now, when the stock went to 184.3 on the 6th of July, I revised my stop loss from 163 to 165. Now, why did I do that? Because here, before this move up, the lowest point here was 165, and I knew that the stock did not go 1, 2, 3, 4, 5, 6 times below 165. So I revised my stop loss to 165, and I added more shares of ICIL at 184.3, around 1,522 shares. Now my overall money that I've deployed right now is 6.8 lakhs. That's the total money I've deployed. So I have 3,830 shares at 177.7 rupees. Right, so that's the overall quantity. Now, as of 6th July, my stop loss has now come to 165. As of that day, the closing was 184.5. Right, the closing was 184.5. So my open risk, which means if my stop loss hits as of that day, I will still lose 7% of the entire money that I have. Right now, that's around 54,000, 58,000 around. So that's the entire money that I'll be losing as of that day. Now remember, as I mentioned before, this amount should not be more than 2% of your overall capital. Now if you had, let's say, 5 lakhs, you should not be losing more than 10,000 rupees in any single investment or any single trade. Now that's how you have to protect your capital, Right now, the open P&L has gone up. So we were initially, when we started the trade on 23rd of July, we were in the negative. Now it has gone up, and we are sitting as of 27th of July. The profit is to 26,000. But based on the stop loss, I will be still losing, 48,000 rupees. Right. So if on that day, even though the stock went to 184, but if it comes all the way back down to 165, I will be losing 48,000 rupees. Now that is the risk that you should accept. Now most of us who are new to the markets do not accept that risk. Now you cannot accept that loss. Now that is the reason what you do, you keep on holding, thinking that this stock will go up, but then eventually it just keeps going down. And especially this is a great bull run, and when the bear run starts, a lot of you will be doing that mistake without yourselves knowing, because you're forced to accept. You cannot accept that you were in profits and now you're going loss. Right? That's the mindset that you need to change. I will be talking more about this in the future videos, but as of this date, 7th of July, I am still in a loss if my stop loss hits. Now let's see what happens after that. Right? So I'm just going to display this. It's not required. Let's move ahead. Now from that day, again we had one day of consolidation, next day of consolidation, then it went down, it went up, and now we see again a big day with big volumes. Right? Now what I'm going to do is, now I'm going to revise. So we crossed this point, and we had a big green day. Now I'm trying to protect my profits. Now already have made some money. So now as of this day, 14th July, if you see, I've again 14th July, I'm sitting on a profit of 1.1 lakh, or on an open P&L of 16%. But as of that day, my stop loss 165. So since I'm sitting on 1.1 lakh profit, I don't want to lose 48,000 at this point. So what I'm doing is I'm moving my stop loss from 165 to 178. Now why 178? Because this low on this day before that move up, right now if you see here, this day was so this day was a big green day, and then were inside that for 1 2 3 4 days, and then this candle one more day, and then we went higher. So now I'm moving my stop from 165. From here I'm moving my stop to this point, which is 178. So this low is 178, right? So if you see here, now my stop loss has moved to 178, and now I have no loss in this trade. Even if my stop loss hits, my capital is safe, and I'm very happy because I don't have to lose any more money. But also if you see here, I've made a note of something called risk reward. Now what does the risk reward mean? Now risk reward basically means if you have bet 1 rupee in the market, how much money are you making on that 1 rupee? So if I make 2 rupees on 1 rupee, it's a very good trade, because you bet 1 rupee and you made more than 1 rupee in the market. Now as of this day, if you see, I started off initially with as of 23rd June, I was sitting, if my stop loss was a hit, I'd be losing probably 0.59% of my overall capital. But as of this day, I'd be losing 0.59 rupees. But as of this day, I risked 1 rupee, and as of this day I'm gaining 1.95 rupees if I book as of that day. Okay, but not with my stop loss. On that day, as per the closing price of that day, my P&L is up 1.9 rupees on the 1 rupee that I bet. Right? So basically here, how much did I risk initially? I risked around 177 minus 163. So that's 14 rupees into 3830. Now that is the rupee amount that I'm risking. So I made 1.95 times that amount as of that day. Right? So that's the calculation. Now let's continue with this. And after this, we again had 2 inside days, right? So this is called inside bars because the bar is completely inside the previous bar. And again, this bar is completely inside the previous bar. And then we're just trying to see if we have a nice close above that point, right? And then we had a nice close on this day, and volume also is good. So what I'm doing is I'm moving my stop loss from here. I'm moving my stop loss to this point, right? So now basically what I've done here is I moved my stop loss from 178 to 195. Now, again, if you notice here, so as of 195, my open P&L that as of that day's market close is 1.58 lakhs. And now, since I've revised my stop loss, I am locking in, or I'm assuring myself that I will not lose more than 66,000. Now that is already a 10% return on our capital, right? That we deployed here. Now also, I bet 1 rupee and I make 2.8 times that rupees, right? So 2.8 times that initial risk that I've taken. Now let's see what happened next. Right now, again, the stock had a nice move. It's just going higher and higher and higher. And on this day and this day, if you see, and this day and this day, Now here, this was the day market panicked and we made a new low. So now, since the stock has gone up from 209 non-stop to 260, that's a 30% move. I am going to lock my profits to this point, because that looks like that day is market panic day, and we should not go below that. If you go below that, probably you're going to head even lower, right? So now, as of today, I'm moving my stop loss to 235 rupees. So that's here, updated here, and as of 28th July, 235 rupees, and the open panel is 3.3 lakhs, but I'm locking in, or I'm assuring myself that I have made 2.19 lakhs, right? So on an investment of 68, on investment of that much, so how much am I assuring myself? I'm assuring around 32%. So that's the open risk. It's not a risk hereafter. Basically, it's the amount that I'm profiting in. Initially, I started with 8% risk, but now I'm in profits of 32%, right? So that's the calculation. So from here, as of today, I know that even if the stock comes down back here, I will lose. I will not lose any money. Basically, I'm making 32% of my overall capital deployed. Now that's how I traded this. And if you have any doubts, do let me know. But I'll just tell you a few other techniques. Now, in case you can't find this way to trail your stop loss like that, you can use a simple indicator called super trend. Now, if you just put super trend, you will see that this is just continuously going up, right? Even if you had used super trend, you will slowly keep increasing your stop loss. Now, as of today, the stop loss is 219.47, right? Even then, you would be sitting decent profits. But you should accept that this is a good indicator to use if you don't want to use any other indicator, because breakouts like these with good volumes, tend to usually head higher. And if it heads lower, all you lose is 1% or 2% of your capital. But if you gain, you're going to gain much, much, much more money, right? So now, as of today, I'm sitting on a RR of 5.89 times of my initial risk. So if I had initially risked, let's say I risked 10,000 rupees, then today you're sitting on a 58,900 rupees profit, which is 5.8 times the initial risk that you have taken, right? Now, also one other point that I wanted to mention is, in case you are not comfortable trading naked price charts like how I showed you, you can also use the CCI indicator along with the moving averages. Right now, what you have to do is you have to try to find breakouts. Right now, we found the breakout here around this week, and then if you see, you can just trail your stop loss towards this 20-day moving average, or even to a 50-day moving average. Now, the 50-day moving average is a little bit slow. As of today, if you see, the stop loss is 190, but probably you can use the 20-day moving average, which is this red line. You would be trailing your stop loss, today to around 220 rupees, right? And another way to do is, you don't sell off until the CCI goes, this indicator here goes below minus 100. Right, so if you notice here, this phase here, this CCI went to minus 100 here, right? That was still a very good exit. According to the price, even I would have exited around that range, and CCI also helps you, exit properly. So that's how I did the trade. But there are some key learnings today which I want to discuss, and this should be the takeaway from this video. Not that I made 3 lakhs, and I'm not trying to boast here, but what I'm trying to teach here is I'm trying to teach you how to take a trade and how to make that trade a profitable trade, and how to trail your stop loss, and just don't forget the trade just because you earn profits, right? So today, some of the key learnings that I want to share. So I have, I think, around 6 learnings. So never listen to what TV analysts or your friends say. Now, in markets, especially in this bull market, everyone is watching TV, CNBC TV or any other channel. And a lot of TV analysts talking about textile stocks, specifically of late, because every textile stock is just going higher and higher. Now, I don't know what the fundamental reason is. There can be a lot of reasoning behind it, but I don't want to get into that today. What I want to tell you is, your friends or your TV analysts will only help you to buy a stock, but they will never come and help you to sell a stock. What do I mean by this? I mean to say that when the stock starts going down, no one will tell you sell the stock right now because it's going to go ahead even lower. And no one in this world will come and tell you that. Probably someone like me can help you do that. If you follow my newsletter, you will probably get the exits, but otherwise no one is going to help you exit a stock. So this is like, there's this saying in Mahabharata where someone Abhimanyu enters the war, but he doesn't know how to come out of that, or basically dies there, right? Now that's the same thing in markets. Everyone enters markets in bull markets, but when the bear market starts, everyone is just stuck with their holdings and they run into deep losses. And you've seen this stock, how it went down 90% after that great bull run we had from 2013 to 17, right? It went up so much. It went up from, from 4 rupees to 200 rupees, but it came from 200 rupees back to 20 rupees. Now you want to lose all that money that you made? You should not. So that's why you should always have an exit plan. So stop listening to TV analysis today, and stop listening to your friends, stop listening to Twitter, analysts for stock recommendations, and start analyzing today. And if you want help, I have a lot of YouTube videos on my channel. Go through them and it'll be a lot of help for you. The second learning today is always define your risk first. The reason behind this is because you're risking your hard-earned money. You slog 10, 14 hours a day, 5 to 7 days a week, and you're coming and putting that money in markets just thinking that you can make quick money. But remember, market is not a place to make quick money. Market will reward people who are disciplined and who want to make money slowly and steadily, not for people who are greedy and want to make money just in 1 year or 2 years. It's not a place to make quick money. It's a place to make wealth, and that wealth can be made slowly. And for that, you should know when to exit, because in markets, everything is a probability. There is a 50-50 chance for each and every trade. Now, if this trade doesn't go up, if some other trade can go down, some trades can go up. So always there's a probability, and if the markets are not on your side, you can lose a good amount of money. So define a risk first. Now, next is be patient and always wait for a setup. Now, if you see here, I did not enter the stock as soon as I found the stock on the 13th of June, right? So I found the stock published in the news on 13th of June, but I did not enter on the same day. I waited for my setup to form, and I thought maybe the stock will go down a little more, and that's when I entered. I entered only on the 23rd of June. So it took me almost 1 week before I entered the stock, even though I found that stock to be a good stock. Now that's the patience that you need to develop in markets. You can't just enter a trade, just because you feel that it is broken out. You don't have to enter a trade immediately. Just wait. Every stock goes through consolidation phases and enter above, a zone where the stop is less, the risk is less. And when I mean low risk, it means that try to find a stock with less than 10% stop loss, or probably even 20% stop loss. But anything more than 20% stop loss doesn't really make sense, because then you can't deploy a good amount of capital in your trades. Now, that's the next point which I want to discuss. So, if you want to create a decent position size, now when I say decent position size, if you have 10 lakhs capital, let's say, if you want to invest in a stock, you need to invest at least 1 lakh in that. You can't invest 10,000, 20,000 if you have a 10 lakh capital. It doesn't really make sense. Why doesn't it make sense? Because if you invest, let's say 10,000, you had a total capital of 1 lakh and you invested 10,000. Now that 10,000 goes up, let's say even 100%, you're just going to make 10,000 more. And how much is that overall as part of your overall capital? That's just a 1% return, right? So if you're investing in a stock, and if you have 10 lakhs capital, try to invest at least 1 lakh, because if this 1 lakh goes up even 20%, that's 20,000, and you're making 2% on your capital, right? But if you're going to just invest 10,000, and even if that goes up 100%, you're just going to make another 10,000. It's not even 1% of your capital. Now that is where allocating a decent capital to one trade, with the proper risk is very important. Next one is trail your stop if you want to catch the bigger moves. Now, let's say if someone entered here, and they're sitting on 20% profit here, and if they exited, they'll miss the bigger move. Now, this stock is not consolidating much. It's just going higher. And also, if you see, this is just going steeper, right? So there is no reason for you to sell a stock unless the stock tells you to sell it, right? So who should tell you to sell a stock, or who should tell you to buy a stock? The charts or the market should tell you when to buy a stock and when to exit stock. It's not your friends, not a TV analyst, even not you. The market should tell you when should I enter, when should I exit. The chart should speak to you, and that's how you should trade and trail your stop loss. And it's very important to trail your stop loss, because this trade can go up 100%, 200%, or even 10,000%. No one knows. But I know that as of today, I'm going to lock in 32%. So that assurance gives me that safety, and I know I'll not lose much. But if it goes higher, I don't want to miss that big move, right? So that's the next learning. The last learning is what goes up will continue to go higher, and vice versa. Now, we all know momentum, right? So if you drive a car and if you start accelerating the car, you're just going to keep on accelerating. The moment you start seeing a signal, if you start decelerating the car, if you apply your brakes, you're going to start slowing down, right? Now, this applies to everything in the world. Anything which keeps going higher will keep going higher. So even in your life, if you have phases of euphoria, you're going to have that phases of euphoria for some time, but then you're going to have phases of, even sad days, and that can happen with stocks as well. So be in stocks which are going up, and don't buy stocks which are going down. I can show you one of examples that everyone was talking about, which is ICIL India. Right? ICIL India has been one of the best performers since 2020. It just kept going higher, but then this was the point that anyone should have exited Apple India, and see from there it has fallen on 1,000 points, which is 20% drop since there. Now no one knows whether this will come higher or will go much lower, or it will come higher. But as of that day, you should have exited the stock as of this day, because you should protect your money and protect how much profits you have. And the markets are telling, the stock is telling, boss, I'm going down, so why not exit the stock, right? So this is the stock I want to discuss today. Basically, how I made 50% in just 5 weeks, and I'll share more such videos with more learnings. But if you did like this video, don't forget to subscribe to my channel. There's a lot of learning that I'm planning to do, a lot of real trades that I'm planning to share, and also the Trade with Trendline series is where I'm doing live trades. So if you think that this is a fake, PNL I'm showing you, I'll just show you the trade book. So I already have the trade book open. I'm just going to refresh this, and so that you know that it's not fake. So if you see, I have all my trades of ICIL here. I entered the 20th of June, and then if you see, I again enter the 24th of June, the next day, I'm just going to show you all the trades. And then on the on the 24th, on the 6th of July, my last trade. So it was 1,500 shares, which I bought as the last, right? So that's what is here. So everything is live. I'm not showing something which I've not done, and I'm going to share more such videos, and I'm sure you're excited to see those videos and learn. And do join me in this bull run to make money with me. And also don't forget to join the Trade with Trendline Investor series. Daily I post a lot of updates there which can help you learn. So I hope this video is useful, and do let me know in the comment section if you're also holding ICIL, and do let me know if you have any questions regarding this strategy of how to pyramid, how to enter a stock, how to scan stocks, and how to trail your stop loss. This is what can make you money, not listening to TV analysts or your friends. Okay, so I hope this was very useful for you, and do let me know that as well. If it wasn't useful, do let me know my feedback, how I can improve and how I can teach you more. Otherwise, have a good day and take care. Bye-bye.